Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Monday the 6th of June. It's good to be back. I was down in Atlanta for the long weekend with my daughter who is getting married, which I'm very excited about. So now she's a married lady and all my children are now married, so very happy about that. But let's go with what's happening in the market right now. It's a wonderful event in Atlanta, but it's not such a wonderful event in the markets today. Obviously we're looking at our portfolio manager right here at MarketClub. I'm going to click on the first market, which is a S&P 500 minus 70. And let's take a look at the chart. As you can see, we're at the lower end of the Thomson channel. We've talked about this before. We're sort of rounding out in this market. And the only thing that's holding this up right now is the monthly triangle, which is right here. You can see this right here. Once that turns red, if it turns red, then we'll see a much more downside action. But you can see how we're sort of rolling over like this and really not getting a lot of action on the upside. So this is a critical area, this 1294, 1290 area. If we close down here, we close badly today, I could see us challenging this level, which is the 1260, which is the major level. This would be what we consider to be major support. And if we go that's the 1260 level. If this level is breached, I think we'll have a lot more problems with the economy and the equity markets in general. So let me just take everything off the screen. We'll go to our next market, which is going to be the silver market, which is, again, really not much has happened since I left in silver. It's sort of just gone sideways. You can see how it's just sort of meandered here. And let me just take this off here, but you'll see our longer term indicator for silver is still positive from 1874, but we have a conflict with our weekly and daily, and they're both negative, meaning this market is not going to go anywhere. And as you can see, it's sort of hugged around the mid-level of the Thomson channel, really no strong defining moment. I would be very careful with this market at the present time because it's not, I'll push this down a little further, it's not really oversold and it's not overbought. It's in that mid-level, the minus 50, which is kind of like a no man's land right now. So I'd be careful with doing anything in this market right now. If we take out the highs and go over, let's say, a close over 40, then that's a different kettle of fish. So let's go back to our portfolio manager, and we're looking at gold, which has hit a new recovery high here. It's plus 100 in our trade triangles. And as you can see, we're currently trading at 1551. Now we have real-time prices on gold. So this is very, very positive. However, I'm a little concerned about this market, and I'll tell you the reason why. We're at the upper end of the Thomson channel. We've also, the highest ever close on gold is right this day here at 1563.18. You can see it right here on the screen. But I would say this could be a little bit of a problem here. So let's look down to our oversold indicator right here. We're sort of at the upper end of the range. Not to say it can't go higher. It just is, caution is a very important word right here. We also had a buy signal today at 1546 for short-term traders. We're currently trading at 1541. So that's just a word of warning on the upside because we are on the upper edge of this band. So let's go back to our portfolio manager and let's take a look at crude oil. And crude oil has sort of meandered along here. It hasn't done anything dramatic. It's just sort of, as you can see, let me pull this down so you see the full action. But you can see just based on very simple visuals, we have gone nowhere. This is just like a boom, boom, boom. Just kind of like really a flat market. Really nothing exciting. We're below $100 again, 99.41 currently. And I would say just stay away from this market. It's a trading range right now, 65. We've talked about this Thomson channel and the Williams percent R. And let me clear everything off the screen. And let me go down there so you can see we're not oversold, we're not overbought, we're in the midpoint of the channel, really in no man's land here. So I'd stay away from this market until we get some real strong indication, either up or down. I don't care which way it is, as long as it's a strong indication that we've got a trend developing, but we don't have a trend right now. Conflict between the monthly and the weekly, that's definitely a problem. So let's go to the dollar index, which we talked about last week. The dollar index is actually up a little bit today. It's a minus 90, but we were looking for this market to go down. We said, actually, we were looking at a dark cloud cover, and I'll just draw that in where we actually talked about that. This is the dark cloud cover right this day here, this red day. It covered 2/3 of the previous channel. It was confirmed the next day, and look what happened. So look at these candlestick chart formations. They're powerful. If you know how to read them, you'll be doing well. If you want to give us a call at 1-800-538-7424, we'll be happy to send you out a book on candlestick charts. I think you'd enjoy that. But again, we're at the lower end of the channel, and there's good support to come into this market around the 73 level. That's a very, very big area. So resistance 75 to 76.50, and support coming in at 73. So that's how I look at this market right now. But generally speaking, you've got all the indicators negative, meaning the trend is down, and it's likely to continue to go down. We'd be negative on the dollar, as we said, from the long term, 81.45. We're currently at 73.92. So let's see how this plays out. Let's clear everything off the screen again and go back to our portfolio manager. I want a lot to cover today. There's a couple more things I want to put in here. So let's look at the Thomson Reuters CRB index, which is right here. This is plus, it's not plus 90, actually it's a plus 60. It's like a trading range, again, like crude oil. You've got the confluence of the negative on the monthly and the positive on the weekly. So it's, generally speaking, this is like a sideways market, not a lot going on. As you go further back, you can see this has just sort of gone nowhere for the last, since February, and certainly big resistance at $370. So watch that market very carefully. So we're going to mention two markets we talked about last week just before I left. One is the Wells Fargo Bank, and I'm going to go back and we'll look at that. Hold on one second. Well, we just mentioned them. Wells, go to MarketClub if you remember. Look at Wells Fargo Bank. The symbol is WFC. And then look at the BAC, which is Bank of America. And look at the ETF that we talked about last week with this SKF. These markets are getting tanked. Obviously, Wells Fargo Bank has some major problems in the mortgage departments and a tremendous overhang there. And that's going to weigh on future earnings. And that's the market's discounting that right now. But generally speaking, the trend is down. And I see this as a short still, and I think it came on today. I saw it on one of the financial shows. They're actually suggesting the same thing we suggested last week. So, hey, this is Adam Hewison. I'm back. We'll be doing these 1 p.m. updates. Thanks so much for taking the time to visit and listen to what we're saying. The trends are obviously very important. We're in the second half of the year, and this is going to be a big second half in my book. There'll be lots of opportunities to make money, I think much more than in the first half, and that's what's important. We sort of dwindled through the first half of the year, really no big trends. Our World Cup portfolio, which we just finished the numbers on, did very well in Q1 and Q2, and I think we're going to have an even better Q3 and Q4. So if you follow the trends, you will make money using our trade triangle technology. So Adam Hewison, every success. I'll talk to you tomorrow. Same time.